Mike Schmidt, thank you very much for joining us this afternoon. And I think one of the key things that I would like to get into is the biggest driver of this particular set of results in terms of positive growth.
Thank you. Will you hold that? Okay. No, well, to you and the viewers, great being here again. And yes, we're very pleased with the set of results under a number of challenging circumstances and particularly in the environment. But our clear focus over the last couple of years has consistently been sweating our assets, driving our costs down, making sure that we're on the right side of the cost curve and delivering the volumes at the market at the right time, at the right quality. And it has to reflect into good earnings.
And let's talk a little bit about that. You were able to reduce costs quite significantly, and I want you to just talk us through that strategy going forward. What are some of the other elements you're going to be introducing to make sure that you're able to contain the costs but maximize operations?
So firstly, we need to see that our operations we are sweating our operations. We make sure we push the assets to their maximum. And in that case, there's still opportunity to grow our business. We make sure people are well rewarded and enthused and have a spirit of belonging to the team. Because one is only as good as your team. And I think that is a second key. The third key is to make sure that we have systems, controls in place that lives and safety, the health and environment under which we work and the communities under which we operate are happy with us being there and recognize and value us.
Talking about happiness, Mike, stakeholders very excited about the fact that you have declared your first interim dividend. Obviously, you're optimistic about something within the markets and for the sector. Talk us through that.
I think there's a number of things that premise that discussion. It goes back onto maturity where you are. Most mature, diversified players today are in a position and have been and have given interim dividends. I think we've come a long way. We have a healthy balance sheet, very low gearing, and we are optimistic about the quality of our ore bodies, the size and the delivery into markets, and the demand for our product is good. And that obviously bodes well and gives us a lot of confidence that this dividend, it's an important milestone, and we are confident we'll be able to sustain that going into the future. Now, obviously, I cannot predict future prices, but the key message we also leave with the investment and shareholders is that we want to balance growth with returning money to shareholders. So that balance is an important component of our business going forward.
And I'm sure sustaining that balance obviously has to do with commodity prices and PGMs, platinum. It's a volatile market at the moment. Prices aren't looking so great. Talk to us about the outlook for the platinum price and really where you're going to be focusing your investments in terms of profit-producing minerals like iron ore.
I think that's a very good question. You'd appreciate we are diversified. So our main earnings drivers are outside of the ferrous division being the manganese and iron ore divisions. Plus we have smelting, so we do upstream beneficiation. We do have a component of platinum, and you speak about the outlook of platinum. We are confident that there'll always be a place for platinum on the provisor that you're well positioned on the cost curve. So a key driver of us is not to get yourself in an environment where you're stuck with assets on the wrong end of the cost curve. You have to be below the 50th and preferably drive yourself down to the 25th percentile of the global cost curve. Now, what you can also do is to look at consolidation. So where you ring-fenced is to unbundle those restrictions, take down that fence boundary, and look at consolidation, which will increase margins, which will reduce costs, and substantially position you on the right end. So platinum is a is a important component of our portfolio going forward.
Two final points for you, Mike. The first one, your executive chairman, Patrice Motsepe, spoke significantly about policy and regulation in South Africa and how that impacts on the mining sector. Your thoughts on things like the mining charter as well as the land expropriation policy discussion that's currently going on?
We are very confident that the issue of the mining charter will be resolved. We are heartened by the fact of the new approach with government and the engagement that takes place within the industry through the chamber. And we are very confident that it will bode well for the industry, it will bode well for the investment community, and certainly we will also capitalize and benefit on that. In terms of the land issue, I think Patrice addressed that. We have to find solutions going forward in terms of proportionality. From a mining point of view, I think there's a lot of upside opportunity to engage with government to deal with land issues around the areas we mine. I think I'm optimistic about the future.
And then the outlook for ARM going forward, you spoke about some growth opportunities. Will these be organic or via acquisitions? And where exactly are you looking for that growth?
We are a globally competitive company. So whilst the majority of our assets today are still in South Africa, we do look across our borders. We have international exposure. We continue to look at assets outside of South Africa. And it's not the jurisdiction that drives us, it's the commodity and the value of those assets. So we have a couple of key strategies. Long life, low on the unit costs. The supply-demand fundamentals must be good. And we'll invest. And we are currently looking beyond our borders. In terms of South Africa, and I think I started it by opening to say, we have to look at our own assets first, because invariably you've got to benchmark against what you got. You know your asset, you know your resource, you know your people, you know your market. It has to take a lot of preference, and we are clearly focused on doing that to enhance our business in terms of profitability, improve margins, sustainability, and pushing ourselves down the cost curve.